Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to another lesson in our Competent Trader series. Today we're going to look at identifying triangles. We'll start by going over what Elliott's rules are for triangles, what type of triangles you can get. Then we'll look at some pictures or some snapshots of triangles, and then we'll go into live charts and we'll have a look at some live triangles in there and identify how they look in reality. And remember, this is just the identification part of your training. What we'll do next, after we've run through how to identify all of the different structures, is we'll start to work on how to interpret them, how they are developing, and how you can recognize them as they develop. The first thing is, as we've been doing in this section, is how do we identify a triangle? So let's just start by putting out a generic triangle, and a triangle will come in a sequence. You have let's call it a motive wave, and we'll look at where you get them in a later lesson, but for now let's just look at the structure of them so we can identify them when we see them. So we've had a motive wave coming up here, and then you start to get a correction of that motive wave, and you'll get an A wave coming down, and then you'll get a B wave, which generally speaking doesn't break the top of A. Then you get a C wave that doesn't break the bottom of A. Then you get a D wave, which yet again falls within a each wave falls within the wave before it, and the structure should be, and let's just change the color for this, the structure should be 3 waves in each of these. So each of these A, B, C, D, E should have 3 waves in it. Now that's it in theory. Then what happens is, of course, what we do is we bound it by a couple of trend lines so that we can recognize what we've got. And once it's over, generally speaking, what will happen is price will move off in the direction that it came into the triangle. So if it comes from the top and you get a triangle, it should break out down. And if it comes from the bottom and you get a triangle, it should break out long. Now, they're continuation signs. They're a sign of a continuation. So they're very, very useful for recognizing where price is going to go next. When you get a triangle, it should break out at the top. We always use should and may because we're never, there are always exceptions to the rules, but 90% of the time a triangle will do that. So that's a generic triangle. Let's now look at some of the actual triangles that you'll come across. So the first one we're going to look at is a barrier triangle, and basically where you get, yet again, your impulse comes up, and let's take this, price comes down in your A wave, your B wave comes up and comes back up to the area of A, your C wave comes down, but it doesn't come down as far as A, that's not natural, but it finishes at the same level as B. Your A wave comes down, doesn't come down to there, and then we bound it and we look at it like this, where it's rising on the bottom and hitting a barrier at the top. Now these things have different names. What Elliott called this was an ascending top flat, bottom rising. But people since Elliott have called it a barrier. So in other words, there's a bit of a barrier there to price rise, and eventually, of course, what price will do is it will break out in the direction that it was already coming in. And naturally, if you're in a bear market, that will look the opposite way round, where the B will come down to the line, the C will come down to the line, and the A will come down to the line and break out, given as that structure in a bear market. Okay, on to the next one. The next one we're going to look at is what Elliott called a descending or a top declining bottom flat. In other words, it comes back down, that's your A wave. B comes up, but it doesn't reach up where A was. It comes back down and comes down to the same level as A. C comes up, doesn't reach the level of A, and E comes down, and yet again it's almost like a bottom barrier. But this time price also goes off in the direction that it came into the triangle in the first place. And obviously the opposite would be true of a descending or a bear. You would get something like this, and then off it would go. And if you put your lines in, you can see you've got that same shape, a descending triangle. That's the bear market, that's the bull market. Let's have a look at the next one. For the next one, we'll draw it the same way. There's our impulse coming up, and this time it's a symmetrical triangle, or a contracting triangle, where A comes to there, B doesn't reach the top, C doesn't reach the bottom, D doesn't reach the top or the bottom, and E doesn't reach the bottom. So they're symmetrical. Now there is a claim that these symmetrical triangles can break either way, but generally speaking a triangle 9 times out of 10 will break in the direction that price came into it. And as we look later on, we'll see where triangles are found, and then you'll see the reason why we say that. But for now, that will do. That's a symmetrical triangle, and as I say, you'll often get people saying these can break either way, guys. Generally speaking, they don't. And the bear would look like this: A, B, C, D, E, and then price drops. And there's your symmetrical triangle. Now let's look at our last one. Okay, this is called expanding. So your A comes down like that, B comes above the top of A, C comes below the bottom of A, D comes below the top of B, and the E comes below the bottom of C. And you can see that it's a triangular shape, but the whole structure is expanding. And then of course price will move off in the direction, yet again, that it came in to the first triangle. Now that's the basics of it. And of course within each of these, as we said with the first one, if we just, let's use green. As with the first one, each of these should have 3 waves. And then off it will go again. Alright, that's the basics. Now let's look at some pictures of real triangles that have been found in the charts, and then we'll go over to the live charts and look at some that we can identify that have happened recently. Okay, so let's just have a look at a few triangles that have actually happened. These are just images. We'll go over some over the live charts in a moment, but this is just to give us an idea. Price has come down from above here, and then this is the first pullback. And you can see it's 3 waves, and then we get another 3 waves for a B. So that's our A, that's our B. You can see the B doesn't quite reach the bottom of A. Then we have a C and a D and an E. Now let's just look at this. I know that the rule is that it's a 3-wave triangle. A 3-wave, you know, it's a series of zigzags basically, but now and again you'll get something like this that doesn't fit the pattern, but nonetheless it's the top and the bottom's the main thing with these. And here we have, there's actually a triangle within a triangle, and that's one of the places we get triangles, is in a B wave position. So there we have the C coming down, and then with an A, B, C, D, little E, and then it's dropped again. And in this bigger triangle we get our E, and then off we go, and this becomes a motive wave that drops out. And you can see whoever drew this, they're expecting a 1, 2, 3, 4, 5 motive wave out of this triangle. Now this is a symmetrical triangle where both the top and the bottom close together. Let's have a look at another one. Now here's another triangle, and it's also a symmetrical triangle, but you can see there are slight variations. This time it's going long, prices come up, and from what we have here, this is the top of the 3rd wave, so this is in the 4th wave position. So we've had a B wave in a triangle in a B wave position, and we've had a triangle in a fourth wave position. That's where you'll find your triangles. Now, this isn't about interpretation. This is about identification. So let's just carry on with actually identifying what we've got. So there's our third wave. That's our A, that's our B, that's our C, that's our D, that's our E. And to be honest, this line should actually be drawn to the bottom of E. Yet again, it's a symmetrical triangle, guys. And then out it goes. It breaks out the top towards the fifth wave. So we've had 3 coming up to here. This is our fourth wave, and then it goes on up to 5. You can see the 4 down there. But yet again, it doesn't, you know, it isn't obviously 3 waves, 3 waves, 3 waves. So don't get too caught up in that. The theory is the theory, and then there's the reality of it. And that's where a lot of people often get caught up, which is the reason why we go through each thing step by step the way we do. Okay, and then there's a final chart I want to show you here. Actually, there's one more. This is an expanding flat, and you can see yet again it's a bull market. That's the top of the third wave. A comes down, and then we get a B. And it would be very easy at that point to think this is going long. We've had a third wave. We've had our pullback, and away it's gone. Then it drops again. And this is what often catches people out, because now they start saying, oh, my analysis to this point's wrong because this is going deeper and it's pushed up there. Then they say, well, maybe it's an expanded flat. And then it starts going again. They say, oh, right, it was an expanded flat. This is the fifth wave. And at that point, you get a pullback. So they say that's the start of the fifth wave. We're getting a pullback. So that's 1, 2. It should go from here. And then it drops. And then people get really confused. And then they start selling, thinking it's going back down. In the meantime, if you just draw your lines, you can see that it's a 1. It's an A. It's a B. It's a C. It's a D, it's an E, expanded flat, and then price takes off. And what do we have at the end of it? We have a diagonal, an ending diagonal for the fifth wave. Now that's something we spoke about in motive waves. I didn't have these pictures at the time, but we'll look at these again. But what's interesting and what's different between a diagonal and a triangle, even if this was a normal, a symmetrical triangle, what's different is the direction that price comes out of. An ending diagonal will end with a drop, whereas a triangle will always end up going in the opposite direction from what it came in. And obviously an ending diagonal on a bear market will always end up with a push up. And then just to solidify that a little bit more, there is a diagonal, which people often mistake for triangles. But the problem with mistaking it for a triangle is that price goes in the opposite direction. And if you think that's a triangle, then you're going to think price is going to push on up from here and people will be going long, and in actual fact it's going down. So there's a 1, 2, 3, 4, 5 different notation because it's a diagonal. In motive wave, so we've got our 3, we've got our 4, we've got a 1, 2, 3, 4, 5 motive waves, different to corrective waves, because we've got a 3, an A, B, C, D, E. Okay, so that's the difference between a triangle and a diagonal, and this is how to recognize triangles. Most of the time you'll see them looking like that, but we'll get on now and we'll look at a few barrier triangles, and we'll see those in the live charts. Okay folks, in this last section we'll have a look at a few live charts and triangles within them. This is a barrier triangle that we were talking about earlier, where price comes up and keeps reaching the barrier, as it were, before it breaks out and goes. Now this particular triangle was very, very difficult to work out exactly where and how it was, because people had that as the A, B, with the B rising above, and that can happen. C, D, E, and then we've had our impulse taking off, and other people had it like this, where that was the end of the fifth wave, and then we had an A, B, C, D, and then the E was very, very small. We would have expected it to come down a bit deeper. It only came to there, and then price took off. Either way, the important thing is the overall structure that gave us, as I say, even if we put it to there, and we go A, B, C, D, E, and then this is our impulsive wave that takes off. Either way, you can see the triangular structure, and the important thing about it is that it's indicating where price is going to go. In this case, price came from below, therefore it was going to break out the top. And it also gives you an idea of where you are in your structure, because that's either a B wave or it's a fourth wave. And you can go back, and this is a little bit more than identity. We'll look at this later on, but in this case it's an A, B, and we're going to get a C coming up here. Okay, now let's go over to the euro, because there's another triangle there, and you can see it immediately on the daily. But if we go down a little bit closer into, say, the 4 hours, we get a better idea of what the triangle looked like. And there we have it. We have an A after the impulse coming down. We have a B probably to there, a C, a D, and an E possibly to there. And then we start our impulsive move down. So yet again, you can see price comes in. We get our triangle. This time it's a symmetrical triangle where both the top and the bottom were closing in on one another. And then we had our breakout. And then the final one I'm going to show you on the live charts here was one that happened last week. And yet again, we were able to trade this. We were able to trade the dollar. And this one we were able to trade as well, because we had a impulse down, we had an A back up, we had a B and a C with a D. And what's different about this one, and this is something I haven't mentioned yet, is that our E wave in itself is a triangle, and you can get that, and it's called a 9-wave triangle. Ordinarily we have an A, B, C, D, E, but the E in itself can become a triangle, and we'll just draw that in a different color. So this E, rather than just being a straight 3-wave, can end up being something that looks like that. So in total you have 1, 2, 3, 4, 5, 6, 7, 8. You have 9 waves before it goes. Excuse me, before it goes. And that's what we had here. And if we go in a little bit closer, we'll be able to see, we're back up here a little bit, we'll be able to see that E wave was a little triangle of its own with an A, B, C and our D, and then, and possibly that is from there, giving us a 3-wave structure in there. And then we had this A, B, C, D, E, and then we got our impulse out in the opposite direction of the wave that came in to start it. And yet again, because we had this gave us right down almost to the R. This gave us an idea that whenever this breaks, it's going to go, and is probably going to go in a similar fashion to the way it came in. And that's kind of what we had from a point of view of an impulsive move. And what we had was a 1, 2, 3, 4, 5, and now we're looking for a deeper pullback for an ABC correction. Okay, I hope that helps. We'll look at it in much more detail in interpretation. That will do us for today. Bye for now.